Hi, it's Nero here from Investment Rise, and as I record this video in the early part of April 2021, we've just seen the pricing data come in for the housing market across our various cities, and oh my goodness, I mean, in February we had the fastest rate of price growth on record. But that's now yesterday's news, because today, as of March, well, we've broken February's record. In fact, March is now the fastest rate of price growth on record. In fact, according to CoreLogic, house prices had their highest monthly increase across the country since 1988. Now, I was back in primary school back then, and maybe depending on how old you are, you may not even been alive back then. I mean, that's how amazing this property boom is. But what makes it even more amazing is this. Back in 1988, median house prices across the country were about $100,000 or so. Yet today, I mean, in Sydney alone, we're sitting well over $1 million. So that means that the rate of price growth when house prices are over $1 million, especially in Sydney, are faster than they were, or at least equal to and as fast as they were when house prices were just 100 grand. So it's no wonder then when we're seeing this level of price growth, people are starting to wonder, oh well, what's the future for the property market? Can prices continue to keep growing at this rate? And if you're someone who's thinking about is now the right time to buy an investment property, maybe you're wondering, well, have you missed out on the property boom? Have prices already gone as high as they possibly can? Is the bubble about to burst? Will prices reverse? Okay, and at the moment, almost everyone you speak to will give you an opinion on that. Okay, so I'm not going to give you an opinion, at least not yet. Rather, I want to go look at some data. I want to pull back the curtain and show you exactly what's driving this current property boom, so you can see the factors for yourself, and you can then determine what you think is going to happen for price growth in the coming several months and even years. So let's get to it. Now, again, I just want to be very clear and say I'm talking about house prices in Australia. I'm not talking about the apartment market. It's a very, very different story there. There are many apartments. Like right now, I'm speaking to someone who bought an apartment in Ultimo in Sydney, and it's now, I said, early 2021, and she bought in 2016, 2017, and she knows that if she was to sell it today, she'd have to sell it for less than what she bought it for. I'm seeing the same thing in places like Meadowbank and Ryde in Sydney, or even Docklands in Melbourne. So the apartment market, it's a very different story. We're talking about houses right now. So let's get into it. What are the three factors driving house price growth? And the first one is record low interest rates. I mean, right now, banks are offering some of the lowest rates on mortgages that we have ever seen in our lifetimes. And of course, this is being driven by the fact that Australia's cash rate is also at the record low of 0.1%. But here's what's interesting. In the latest Reserve Bank of Australia meeting, they first of all kept interest rates at the record low of 0.1%. But then their announcement that they always give at the end of that meeting gave us a good insight into what it will take for interest rates to rise. All right. Now, in the old school economics, or the way the Reserve Bank of Australia used to, I guess, treat the economy pre-COVID, it was all about inflation. But this latest announcement shows that, as I've said in past episodes, they have totally changed tact. In fact, the Reserve Bank of Australia Governor, Mr. Philip Lowe, said that interest rates wouldn't rise until inflation hit certain targets. But for that to happen, wage growth would have to be materially higher, which is not expected until 2024. So that means that the Reserve Bank is literally committing to keep interest rates at these low levels for another 3 years. Because yes, unemployment has fallen. It's now under 6%, around about 5.8% or so, again, depending on which report you read. But that's not good enough for the Reserve Bank of Australia at the moment. They want to see unemployment fall. They want us to go into what's known as full employment, which, if you've seen anything that the Reserve Bank has announced in the past, they're really wanting unemployment to go to about under 4%, maybe even under 3%, because only once we reach what's known as full employment, only then can wage growth happen, right? Because if employers have their choice of who to employ, well, they're not going to necessarily, offer strong wage growth. But if it's difficult to get people to work because unemployment is very low and we're at that term full employment, well, only then will you see wages growth. And only then is the Reserve Bank saying they will increase interest rates. So we've got another 3 years at least of these record low interest rates. So that was the first factor. Then the second factor is just how much demand there is in the market right now. And that demand is only increasing. I mean, check this out. This is an article from realestate.com.au, and in the second paragraph it says, a real-time report that analyzes Aussies' house hunting behaviors has revealed that demand is still outstripping supply, with views per listing on realestate.com.au up more than 100% since COVID-19 arrived down under. So you've got demand far outstripping supply, which, all other things being equal, certainly points to continued price growth. But I actually think this demand is actually only going to increase. I've in fact spoken about this in the past, but we're now starting to see more economists and other experts come out and start to talk about it. Check this out. International border reopening to cause housing price surge. Reopening Australia's borders to migration and international students will push house prices up even further, as exclusive new data reveals Brisbane's highest median has soared more than fourfold over 3 decades. Industry experts say another wave of real estate price surges is all but guaranteed when the pandemic measures ease, with demand already fueled by record low interest rates and strong economic growth expected to intensify against a backdrop of continued short supply. So what does that mean? Well, right now, the demand is being driven by those of us who live in Australia right now. But in the future, that demand is going to be amplified as migration increases, as more and more people come into this country, need a place to live, and we just don't have the supply of houses to meet that excess demand. And then the third factor driving property prices up are supply shortages. And it's just a fact that there just aren't enough properties right now in Australia. And I think things are about to get worse. I mean, in this article from The Domain in April of this year, it says why there's not enough property for sale right now. The number of property listings on the market slumped in the run-up to Easter, leading to fears home prices will surge further as demand continues to outpace supply, with the volume of houses and units for sale in Sydney dropping last week by 12% over the week before, in Brisbane by 8%, in Adelaide by 9.7%, and Darwin by 11.4%. Melbourne showed a minuscule rise of 1.5%. The only other exceptions to the downward trend were Hobart, where listings rose by 18.7% for the week to March 28, Canberra by 10.7%, and Perth by 7.1%. And I think these listings will continue to drop as sellers decide to hold off because they can see that the market is rising, and so they want to wait a few months to see if they can get even more for their property, which will reduce the supply that's available. Secondly, I'm seeing a lot of sellers scared to sell their property because they haven't yet found another home that they want to buy, and they're worried that if they sell their home, have to wait a few months before they find another home, they could almost be priced out of the market because prices are rising so much. So hence there's a hesitancy to sell properties or put their property on the market, which is again going to worsen these supply shortages. I spoke to a local real estate agent last night and she was complaining to me. She said she had sold everything she had. She said she had no other listings except for an older rundown property in a bad location that she couldn't sell. And she didn't know where she was going to get her next property to sell from because there was such a shortage. And I'm seeing these kind of comments and feedback across the board. So I think these supply shortages are only going to get worse. So continued low interest rates, strong demand, which I expect to only increase, supply shortages that are worsening, well, it certainly seems that price growth is here to stay for quite some time. Now, of course, the cynical or the skeptic will say, well, Nero, you help people invest in property, so of course you're going to say the property prices will increase. And I totally get that perspective, except if you've been following my work for any length of time, you'll know that in 2016 and 2017, I was out there telling people not to buy an investment property in Sydney or Melbourne because I could see that those two markets were overheated. And in fact, I said that you want to avoid those markets because I expect prices to drop. And we know from mid to late 2017, both Sydney and Melbourne had their biggest price declines in several decades. But right now, I'm not seeing any of those headwinds anywhere. The Reserve Bank of Australia, well, they're not concerned about prices rising. In fact, expect prices to rise a lot more. APRA, which is who comes in and talks about lending standards, well, they're not concerned about lending standards either. So it certainly seems like price growth, as I said, is here to stay, and especially when you consider that it has never been easier to find property that gives you good capital growth plus positive cash flow so that you're not out of pocket each and every month. It certainly seems that now is a great time to enter the market if you're a property investor. It certainly seems like there's going to be some significant price growth over the next little while, with many markets across the country rising by tens of thousands of dollars each and every month. And the question you've got to ask yourself is, don't you want to grab some of that equity gain for yourself?
Hey, thanks so much for watching. If you found this video valuable and you're thinking you might like my help to help you find an investment property, then head on over to nerocall.com to discover our unique 5-step process that's helped my private client group purchase now well over $66.2 million worth of property. And then if you like what you see, you can book in for a half-hour phone consult with me personally. Either way, thanks again for watching.